afternoon, everyone, and welcome to PBA at Noon. I'm Paul Benwell, and I'm joined by my colleague, Sophie Caesar. Today, in conjunction with our friends at Kin Communications, we have with us Anacortes Mining, who recently listed on the TSX Venture in October of this year under the symbol XYZ. Anacortes is a new growth-oriented gold company in the Americas, which owns 100% interest in the Tres Cruces Gold Project located in Peru. Anacortes is well capitalized and intends to aggressively advance the oxide resource at Tres Cruces through feasibility and to production under a heap leach open pit scenario. Additionally, Anacortes will seek to further growth opportunities in the Americas with the goal of creating the next mid-tier multi-asset gold producer. They are led by a team of experienced, successful industry professionals with many years of mining, operational, and capital markets experience. Joining us today is the CEO, Jim Currie, and from Kin Communications, President Arlen Hansen. Just a reminder to everyone, Sophie will be monitoring the chat and question and answer box, and we'll ask your questions after the presentation. Jim,
organizing this, much appreciated. Thank you, everybody who has tuned in today. Much appreciated, and hope you'll enjoy the story. I'm gonna share my screen here now. Can I do that? I guess I can. Just give me a sec. Perfect. Actually works. Love it when things work. So this Anacortes Mining, which was formed with a merger between a shell company which I controlled called First Light Capital, and we took over a company called New Oro Peru Resources, which has the Tres Cruces project down in Peru. It's a very prospective gold project, and in fact, one of the highest grade gold oxide deposits that is not currently being developed anywhere in the world. So I feel like a story, and I'll tell you about it over the next 25 or 30 minutes, and that leaves some time for questions at the end if anybody's interested. I'm a 40-year mining industry veteran. I've been COO, I should say, a number of companies that most recently gold for that Pretium Resources, where I was intimately involved in the construction of the Brucejack project. And then for that, the okay, sorry, the dogs are now working. So yeah, so before, I was at New Gold, we had 3 operating mines and a large construction project called New Afton that I was responsible for. So I've been in the mid-tier sector for most of the last 20 years, and what we're going to create here is a new mid-tier producer. And what we have here with Tres Cruces is the start of something that we think is pretty special, and it'll be the platform for the growth of our company. This is the lay of the land here. The top picture is a picture of the Tres Cruces project. You'll notice the drill roads there. This project was drilled by Barrick back in 2003 to 2005 when it was under option. And Barrick has had this project under option until December of last year when they elected to give up the option because they were selling their nearby property, Lagoona Norte, which I'll tell you about in a minute. And the bottom 2 pictures, the geologist down here is standing at an outcrop, a high-grade gold outcrop, where you've got the gold mineralization, which you see in the rusty area there, and it's overlain by a rhyolite cap. So I'll go on to the next slides. So our mission, our current mission is we're going to take the oxide resource of Tres Cruces to production as quickly as possible. And what that'll entail is initially we'll do a PEA, which we're going to announce next week. We're going to get started on that. And then we're going to do some infill drilling to take the project to feasibility. And we hope to have a feasibility study out the gate by the end of next year. And then through permitting and into construction after that. The general overview of the company, we've already embarked on an aggressive program of project research, and we're talking to other companies right now about potential M&A opportunities to acquire an operating or close to operating asset. So investment highlights. So this is in a very prospective group of rocks, and I'll show you a picture here later in the presentation. But this belt of rocks extends from Newmont's huge Anacortes mine up in the northwest to Barrick's very large gold project, which was recently shut down, Perina, down in the south. And that belt of rocks covers some pretty significant operating mines. Lagunas Norte, which produced 10 million ounces and still has 4 million ounces left in a reserve base. Pan American Shahuindo and Lorena projects are in the area, and plus a number of other well-known and very large gold discoveries. This belt of rocks is akin to the Carlin Trend, the Val-d'Or area of Canada, and the gold belts in Ghana. So it's a very, very prolific gold belt. We're only 10 kilometers away from Barrick's old Lagunas Norte mine, which has recently been sold to a group out of Singapore. There's all kinds of infrastructure there. There's power nearby. There's lots of access to water. There's a paved road to the coast. The city of Trujillo is only 120 kilometers away, and it's a very well-established supply center. Plus, unlike a lot of parts of South America, we have access to a well-trained workforce. Because people have worked for Barrick and been trained by them, and Pan American and others. We have a very strong leadership group, as Paul was saying, and I'll talk to you about that in an upcoming slide. The project has 2.5 million ounces of indicated resource, including 630 ounces of high-grade leachable gold. Notably, this is the first time in 17 years that this project has surfaced. So for most of you that would be listening to this webcast, it would be a new project for you. Basically, Barrick had the thing, they drilled it off, and then they operated it with geological staff out of their nearby Lagunas Norte project, but they didn't need to mine it because basically at the time, Barrick was mining 1 million ounces a year, making money hand over fist out of Lagunas Norte. So they had a very low option payment each year. It was only $250,000. And that enabled them to maintain the optionality on this very attractive gold resource. This is a good standalone project, which I'll talk more about in upcoming slides, and the property remains very, very much underexplored. A bit about myself. I basically have 40 years of experience, and as I was saying, I've built mines all around the world. The guy that will run our Peruvian subsidiary for us, Steve Botts, an American national who's lived in Peru for many, many years, previously worked for the large Antamina mine, where he was responsible for the HSE function, which is health, safety, and environment. And so he's going to be very integral in getting our permits for us, not only for our upcoming drilling program, but also for times when we get ready to go into production. We have a special relationship with the Lumina Group, and Marshall Koval will be a special advisor to the board. And for those of you that don't know Marshall, he's the president and CEO of Lumina Gold, and the Lumina Group is basically Ross Beatty at Pan American and the chairman of Pan American and Equinox, and the Lumina Group is his investment arm. And previously they had Northern Peru Copper, which they sold for a large amount of money, and more recently Lumina Copper, which they also sold. So yeah, Marshall will be a special advisor to the board, and possibly will join us at some point down the road. So our capitalization, our current share price is in the $1.70 range. We've got about 42 million shares outstanding. Current market cap's about $72 million. We have $13.5 million worth of cash in the till. that'll take us through all of our activities through the end of 2022 and possibly beyond. So here's a map showing the project area, northern Peru, the Anacortes mine, as I mentioned, Barrick's huge mine up in northwestern Peru, and then the Perina mine at the south. And you can see in the insert here that Tres Cruces is just 10 kilometers away from Barrick's old Lagoona Norte project, and you can see the proximity to Trujillo. I must say that this is a very mining friendly part of Peru. You'll often hear stories about protests in other parts of Peru. This is a part of Peru where everybody is very, very pro mining. So an overview of the project. So we have 4 mineral concessions covering 3,000 hectares. That's a very large concession, and for those of you that still talk in imperial terms, that's 11.5 square miles. So it is a very large area. It was operated, as I said, by Barrick from 2003 to 2020. A lot of drilling was done, and most importantly, more than half of that drilling was in diamond core holes, which would give one a really good comfort level in the resource base there. Sometimes reverse circulation tends to smear gold grades, and the comfort you would get from a total reverse circulation model wouldn't be as much as you'd get where you have a lot of diamond drilling. So we're very, very comfortable with this resource base. More than 95% of resources inferred. So that's a really, really important thing too when you look at investment. As the map shows, mineralization here, except to show you that you've got the main oxide pits falling within a bigger sulphide pit, and I'll show you a cross section through that a little bit later. But note that there is an awful lot of drilling that's been done within that oxide pit, and basically the drilling that has been done to date is quite shallow. So there's a lot of exploration potential at depth, which I'm going to talk about here in a couple of minutes. So mainly these oxide deposits that are mined with heap leach mining are quite low grade. You know, the world average right now is about 0.7 grams per ton. I've had a lot of experience mining stuff that's even lower, 0.3 to 0.6 grams per ton. So to have a project with 1.37 grams per ton head grade is really, really important. If you look at some of these intercepts here, they're amazing. You've got 63 meters of 2.174 grams per ton. You just don't get that kind of assay result in heap leach mines. So that's a cross section through the northern part of this pit. This one's an even better one. You've got 6 grams per ton at over 36 meters. Well, that's an underground. That's an underground head grade. You can mine that underground and make money on it. So imagine the kind of money you can make on it by mining it with open pit with a very economical heap leach option on the back end of it. So this is a cross section through the middle of the deposit, showing both the oxide pit and the sulphide pit. So the oxide pit is this red line up here, and then the deeper sulphide pit, which will be mined at a later date, is below it. But note these red colors here. That's all open-ended mineralization there. This is all open-ended mineralization. And then you got your long section, and it shows you even more open-ended mineralization. And these drill holes just aren't very deep. So we believe that there's truly a lot more to be discovered here. Metallurgy, there's been a little bit of metallurgy done, and the metallurgy that we've seen so far is very positive. The 85% number on the top line here, that's from what they call bottle roll testing, and so it's bottle roll testing of reverse circulation chips, and that's how we do grade control for open pit heap leach operations, to see whether the material will leach or not. And 85% for chip samples in a 24-hour bottle roll is extremely good. But more importantly, the column leach testing, which we've done, which simulates how the material will react in an open pit or in a heap leach pad. We've got 82% recovery there, and that again is very much at the high end of the scale. As you get through the oxide zone and start transitioning down to the sulfides, we have what they call leachable sulfides. And even those leachable sulfides, as you can see, have a 65% recovery. And then when we get down into the sulfides sometime in the future, even the sulfides will be very recoverable by standard flotation, pressure oxidation, and CIL processes. Not going to talk much about this slide. It's a bit more technical, but it's basically it's the technical data that was used to float these pits so that you could have the resource that we'll talk about in the coming slide here. But these are all good numbers. $1,500 gold price, the standard gold price used at this point in time, and all the mining costs are from Barrick's nearby Lagunas Norte project. So they're all solid numbers. So this is the current mineral resource table for the project. As you can see, the pure oxide, 425,000 ounces at 1.37 grams per ton. Leachable sulfides still very good grade at 1.12 to give you the total of 630,000 ounces of leachable material. But even the sulfide at depth at 1.84 grams per ton is still a very reasonable grade sulfide deposit, and at these gold prices, even with the processing that you'd need, is still going to be very, very profitable. So we talked about exploration potential a few slides ago, and this is just a segue into this chart that I'm going to show you here. If I put out this resource or this drill hole tomorrow, this RTC 255, 228 meters at 2.95 grams per ton. Folks, that is a world-class hole. If I put out a news release with a new discovery with that on it tomorrow, our share price would go from $1.70 to $3. There's absolutely no doubt about it. Look at this hole just above us here, 278, 66 meters of 4.3 grams per ton. Again, another world-class hole. But the neat thing is, this bottom's in mineralization. How much further does it go? Does it go 10 more meters, or does it go another 100 meters? Does it go 200 meters? I don't know. And even these deeper holes that have been drilled, you're still ending in mineralization at 350 meters. You've still got 38 meters of 1.07 grams per ton. This one, almost 350 meters. You got 50 meters of 1.5 grams per ton. So what this says is it's a very, very strong system, and we're really, really excited about it. Benchmarking. So I was saying to you earlier, the average head grade of these deposits. This is just a bucket. It doesn't include every deposit in the world, but it's a good cross section of heap leach projects that are close to operation or in development right now. And Tres Cruces is right up there at the top of the list. And just for reference, I mean, the coffee project is Newmont's project up in the Yukon. It has no infrastructure whatsoever. Whereas, as I was saying in an earlier slide, Tres Cruces has just got an amazing amount of infrastructure, and yeah, it's going to be a real barn burner once we get to mining it. So the next steps at Tres Cruces, well, we've already started on this. We've basically acquired the core from Barrick now, and one of the things I should say is, as part of this, we bought the surface rights from Barrick. Cost us $1.6 million US, but that's absolutely huge, because that means we don't have to negotiate agreements with the locals before we build a mine, and it will certainly help us with our drilling programs. So we own the surface rights over the entire mineral resource, plus over a sufficiently large area around the mineral resource that we can construct our heap leach pads and our our surface facilities. So we're going to continue exploration to take the project to feasibility, but we're also going to, at the same time, we're going to do some deep drilling, and then we're gonna go around the rest of the concessions and see what else is there. And as I was showing you in the very first slide there, there's a rhyolite cap there, which means there's a lot of potential resource there that's never been surfaced, and we're gonna have to find that resource by drilling, which we intend to do. Step 3 there, as I was saying a few minutes ago, we're gonna quickly advance this to a PEA, and this is gonna produce very, very good numbers. This is gonna have an all-in sustaining cost of well under $1,000 an ounce, and at $1,700 gold, it's gonna make pretty good money. So we'll advance the permitting for the construction of the project, and we will and we'll get moving on other fronts. So something I haven't really talked about is the growth. Well, as I was saying right in the opening statement there, this is a company that has been formed to grow. I've been involved in a number of mid-tier producers. The growth of those mid-tier producers has always been driven by guys like myself and my operating teams, and the share performance has been driven by the performance that comes from the operation. So I'm a guy that's well experienced in this area, and I've done this for others a number of times, and I've just decided to do it for myself this time, and I've put together a very strong operating team. I've got access to financial institutions. We've developed relationships with a number of people that have financed mines over the years, and when you're looking at a company, what are you looking for? You're looking for strong management. You're looking for financial capability. You're looking for good share structure, and you're looking for a good asset. Well, we check all of those boxes, and we check a 5th box, because that 5th box is, we're not going to just sit on our duffs and pat ourselves on the back here. What we're going to do is we're going to grow this company, and I think you're going to see something pretty special developing here. And that's it. That's all I have to say. And I've kept it a little shorter than I normally do, but I wanted to make sure everybody had time to ask questions should they have any.
Thanks, Jim. That was really great. We do actually have some questions, and while you still have the slide deck up, we have one here that says, on slide 18, you talk of drill results. Of great numbers. Where did they originate from?
Well, that's a very good question. So those numbers came from Barrick. Barrick drilled those holes, and so I think you can trust that those numbers are real. Barrick's a company that does very good QA/QC, and all of those holes would have been properly tested according to National Instrument 43-101 standards.
So now you mentioned Barrick. Why did they leave?
So that's also a good question. So Barrick, as I was saying earlier, Barrick had this project under option for 17 years, and while they were mining the Laguna's Norte project and making very good money there. I think it was always their plan to develop the Tres Cruces project, but a few years ago, when Randgold and Barrick merged, I think what happened was Mark Bristow, the new CEO of Barrick, I think he decided to get out of Peru, and the Pierina mine was finished. It was undergoing reclamation, and Laguna's Norte was getting to the end of their oxide resource, which meant that Barrick was going to have to spend a ton of money developing the sulphide resource. They were going to have to build a completely new mill, and they decided to sell the thing. So Laguna's Norte was on the market in 2018, but because of the gold price at that point in time, gold price was only $1,200-1,300 an ounce. They didn't get the offers that they were hoping for, so they actually took it. They took it off the market, and then put it back on again in 2020, at which time they were able to sell it to a company called Peru out of Singapore. And basically, to exercise the option, Barrick had to declare a production decision on Tres Cruces. And I think it just simply came down to the fact that Tres Cruces wasn't ready for a production decision yet. It needed to go through feasibility, and they weren't there. And I think Barrick just decided not to saddle an incoming partner on Lagunas Norte with a production decision that they might not have necessarily agreed with. So yeah, it was just a very fortunate lining up of the planets for us that we were able to get a hold of this thing.
Oh, excellent. So we have a couple of questions here on your time frame, and if you could give us a few words on the development timeline.
Sure. Yeah, no problem. So basically, we're going to announce the PEA. We'll start the PEA in the next week or so. That'll deliver. We'll have a delivery of that by probably mid-February. We're putting in our applications for drill permits. Peru, interestingly, is very prescriptive in the way they accept and review and deliver permits for drilling. You can only drill in 20 locations in any one program, and they have to be exact locations. So if the mines inspector comes and sees you're not drilling in the spot that you had on your permit, he'll pull you off the hole. So we have to be very careful about how we plan these things. And so basically, we believe we'll have our permits to drill by early in the new year, and would hope to be drilling by February or March of next year, with results coming after that. We would hope to we plan to have our feasibility study done by the end of 2022, or at the very latest Q1 of 2023, permitting through 2023, and construction in 2024. But that's just this project. As I said, we're going to be very active on the M&A front, and you will certainly see another project in this company well before Tres Cruces goes into production.
And that is the goal, right? That's the end goal, is to take it into production.
Absolutely.
Okay,
Absolutely.
Perfect. Then we have another question here. So this attendee says they understand that you're going to be going for oxide first, but when do you anticipate to start drilling the deeper sulfides?
So we're going to start drilling the sulfides right out of the gate, and that's a good question also. The whole idea is we've got about 2 million ounces of sulfide resource right now. We think that this is really expandable. I showed you the depth potential, but it's not just the depth potential. There's other potential within that 3,000 hectares of ground that we own there. So we're going to properly evaluate the entire concession before we make decisions about how we're going to mine the sulfides, because you want to know, are you building a 40,000 ton a day plant, or are you building a 100,000 ton a day plant? So you want to do all your exploration first, so that you know what you're looking for. And in the meantime, the oxide project will throw off nice cash flow while we're doing our final planning for the sulfide project.
Okay, excellent. I see that Paul's joined us. Paul, do you have a question or two? I think you have a lot more than a question or two for Jim, but go ahead.
I have a couple of questions. Yeah, I'm just scrolling through them. With the depth potential, you haven't really, you don't really know what's under there, but how big do you think this could be? Because you've drilled deep enough, and some of those drill holes on that slide 18 were pretty deep.
Let me give you an analogy. There was a company back in the 80s called Western States Mining, and they had a little project called the Gold Strike project. And Gold Strike had a little 40,000 ounce per year heap leach operation on it. And there's one of the geologists at Barrick saw that, and he liked the geology, and he convinced the guys at Barrick to pay $66 million to buy out Western States Mining. And the geologist was a fellow named Brian Meikle. And Brian went in there and drilled a hole shortly after Barrick acquired this thing. And $66 million for a little 40,000 ounce producer back in 1966 was considered insane. So Meikle went out and spotted a drill hole, and he drilled 600 feet of 9 grams per ton, and that became the Deep Post and Betsy deposits that anchored the Gold Strike mine, which has now produced 44 million ounces. So the analogy there is I mean, it's a different system. It's a different system, but that 228 meters, which is over 800 feet, that bespeaks a very, very strong system. You don't just get 228 meters occurring in a little veinlet or something like that. When you've got that kind of intercept, that says you've got a very strong gold mineralizing event. And if you remember in that very first slide I showed you, that rhyolite cap is actually a pre-mineral rhyolite cap. So what happened was the mineralizing fluids came up and they hit that rhyolite cap, and then they started spreading out like a big chocolate bar underneath the rhyolite cap. Well, that rhyolite cap covers a good portion of our concession. So how much is there? Gosh, I don't know, but it's more than 2 million ounces for sure. 5 million ounces, 10 million ounces. I think this is a very, very expandable resource. It's big. It's a big system.
Okay, so one follow-up question: how deep, when you do start drilling, how deep how deep is your deepest hole going to be? Have you already anticipated
I have enough money to drill to the bowels of the earth if I have to. We are going to drill until we run out of mineralization. And once, as we get down, there's free gold in this in this deposit. So it's not hard to tell whether you're in mineralization or not. So we're going to just, as the core comes up from each run, we're going to look at it, and if it's still looking good, we're going to say keep on going.
Okay. Just a couple of quick other questions.
Sorry, Paul, just to interrupt real quick. You mentioned, being financed. What were the terms of the financing to acquire this asset?
None. We basically took it over. We had an agreement to raise, as part of the transaction, we had an agreement to raise $17 million. We actually raised $22 million in a tough market. The day after we announced the financing, gold dropped $100 an ounce. That was back last June. So I mean, people looked at the asset, and it was largely institutional that came in, but they looked at it. They looked at the project. They looked at management. They looked at the shareholders. I mean, I haven't even mentioned our shareholders. Our shareholders include guys like Ross Beatty, the Lagoona Group, Eric Sprott, Nolan Watson at Sandstorm. Pan American owns 11% of this company. So we've got a blue chip group that are backing us. A fellow named Paul Stevens, who used to back Robert Friedland's companies when he had an outfit called Robertson Stevens out of San Francisco. He's been picking up the stock. I mean, basically everybody that sees this story likes it, and they should, because it's a good story.
Well, that answered one of my next questions, because I want to know who the shareholder base was. Go ahead.
Sorry,
Yes. To make a long story short on that one, they raised $22 million at $2.40 equivalent on the stock.
Okay. Now, just a couple of follow-up questions. Are there any, do you own the property outright? Is it leased, or is it from the government? I know it's government. Is it government land? And are there any outstanding royalties or anything attached to the property?
Yeah, we own the concessions. As you would in any country. It's the same as the United States, or the same as Canada, where you have the mineral rights. So we own the mineral rights. But as I was saying earlier, we also own the surface rights over the mineral resource. Barrick very smartly were very prescient, and they went and bought the surface rights back before they even started drilling from the local farmers, and they gave them they sold them to us at their book value. So tremendous saving for us.
Excellent. And I don't know if you touched on this, Jim, but would you be bringing in a partner on this project, or are you going to basically do it like alone?
We're doing it alone. We're doing it alone. I mean, when we get to when we get to the sulphide portion of it, and if it's a $2 billion nut, well, yeah, we'll see then. But I will tell you though, we've already had. You see, this thing was so under the radar screen that even the big companies didn't know that this was available, and because Barrick had it for so long. And since you had in the last few weeks, you've had this new issuer called Anacortes Resources, and many thanks to people like Arlen that have been out there spreading the good word. So some of the majors have been going, oh well, who's this Anacortes? So we've actually had a couple of calls from majors already looking to see if we might be interested in joint venturing. This is a good property.
Now, with global supply delays and everything else, is that impacting you in any way?
Not yet.
To move forward.
Not yet. No, we're fortunately we're at an early stage, and we're going to be doing some drilling, and my intelligence down in Peru is that there's drills available, so that's all I care about right
now. All right. One final question before we wrap this up. You obviously have boots on the ground there, and yeah. What are the restrictions of flying in and out with COVID? I mean, I don't know.
Well, that's a very good question. The restrictions are now over, fortunately, but we actually had tried to bid on the Lagunas Norte project when it was available, and we had money lined up to come in and buy the Lagunas Norte project, but we couldn't get in there because of flying restrictions back earlier this year. And in fact, earlier this year, Peru was they were in a real lockdown. You could, at one point in time, for a number of weeks, only one person could leave the house for 1 hour a day. Wow. To go to the grocery store, to the doctor, to the pharmacy. But that's lightened up now as they've got the vaccination programs out there improving. You can travel anywhere now.
Okay. And one last question that I overlooked in the box here: are there any potential synergies with Lagunas Norte infrastructure?
Yes, there are, and we have had discussions with the new owners of Lagunas Norte, and they are very receptive to working with us. So, but those discussions are at a very early stage, and we have to look at, is it economic? It's 10 kilometers away, and then you have to do the cost benefit analysis of whether you mine this stuff and you put it on your own path right beside the pit, or do you put it in a truck and ship it to Lagunas Norte?
Okay, I mean, I have a few more questions, but
I've got time if you've got time. I've got a few more minutes, but maybe I know shareholders and investors' attention is
well, that's fine. I'm going to wrap it up here, but
well, Paul, maybe we could just maybe we could just touch on the cost of drilling and how much you've budgeted for that.
Yep.
We have a budget right now of $3 million through our first drilling program in early next year, but that's just a budget. We have enough money, as I said. We've still got $13 million in the bank. That's just a provisional budget. We've got in fact, tomorrow afternoon I'm doing a final meeting to see how much we're actually going to drill. But if it's $5 million, that's what we'll spend.
Excellent. Well, listen, this is a fantastic story. I'm very happy. Thank you, Arlen, for bringing this company to us. Jim, I'm pretty sure I know you, Jim, so good to see you again.
Yeah.
Thanks to everyone who attended. Much appreciated. If you have any further questions, please send them to me or to Sophie. We'll forward them on, and I'm sure they'll get back to you ASAP.
My pleasure.
Again, thank you,
Thanks
Jim.
for
Much
having
appreciated.
me, and thanks to everybody that's attended. Thank you again.
Thanks, Arlen.
Thanks, Paul. Thanks, Sophie. Thanks, Jim.
Thank you.